Both Alibaba and Sea Ltd have dropped more than 50% in share price over the past year. From their all-time peak of over $300 they are both now trading below $100. It has been an interesting earnings season and volatile time for the stock market. With the Russian invasion of Ukraine, the global stock market also went haywire. Probably some of you can't sleep lately looking at the market all going rate, which is why it's important to diversify your portfolio. Now, if you want to know how to protect your portfolio from events like these or major crises, you can join me in my free sharing session. The link is in the description. Now, many of the tech stocks are down, including Baba and Sea Ltd. So let's see what's going on with them. Starting with Baba. In their latest quarter, they reported a $38 billion revenue. This was a 10% growth, but it's their slowest quarterly year-on-year growth rate since their 2014 IPO. Their income from operations, on the other hand, decreased 86% year-over-year, which does not sound good. This sharp decrease was due to increased investment in growth initiatives, increased spending for user growth, as well as support their merchants. Now, let's look further into a few of their business segments. For Alibaba's commerce side of the business is now split into two, China commerce and international commerce. Starting with China commerce, revenue for the China retail business in the quarter increased 7% year-over-year. Wholesale business increased 10%, while direct sales and other increased 21%. Customer management revenue, or CMR, however, declined by 1%. CMR is the revenue Alibaba gets from services such as marketing and company sales to the merchants on their Taobao Tmall e-commerce platform. The slight decline in CMR was said to be due to slowing market condition and increasing competition. However, results from Taobao deals and Taocaicai looks good. They have 280 million annual active consumer on Taobao deals, an increase of 39 million from the previous quarter. Several initiatives were also successfully executed to optimize logistics costs and improve delivery experience. Paid order on Taobao deals grew at over 100% year-over-year. Meanwhile, Taocaicai continued to penetrate less developed areas while generating GMV growth of 30% quarter-over-quarter. More customers are also purchasing food, groceries, and fresh produce using Taocaicai. Now, moving on to their international commerce segment. Revenue for Alibaba's international commerce business grew 18% year-over-year. For international retail, it increased 14%, while international wholesale at 29%. In terms of international retail, Baba is expanding consumer base in key strategic regions. During the quarter, combined order growth of their international businesses was around 25% year-over-year, driven by growth in Lazada of 52% and Trendyol of 49%. They were partially offset by a decrease in orders for AliExpress in Europe. This is due to value-added tax being imposed on cross-border parcels below 22 euros in value. Now, for international wholesale, they are increasing value-added service offerings to drive international trade. There's growth of around 50% year-over-year in value of transactions completed on Alibaba.com. This is driven by export growth of consumer and industrial goods from China to other major developed and developing countries. Value-added service revenue also grew 43% year-over-year. So overall, in terms of Alibaba's commerce businesses, even though they are facing headwinds in China for the first-tier city, they are executing well in terms of penetrating into China's less developed areas and international developing markets. Moving on to Alibaba's cloud business segment, they reported revenue growth of 20% year-over-year. That is slower than the 33% growth seen in the September quarter. However, losses for the cloud division have narrowed. There are two factors affecting their cloud business. First is TikTok owner ByteDance has moved their overseas operations off of Alibaba's cloud products. And second, China regulatory crackdown on sectors including gaming and education, which are key customers for Alibaba. However, Alibaba has continued to diversify their customer base to other industries. Revenue from non-internet industries accounted for 52% of the cloud revenue. Alibaba Cloud also added 2 data centers in APAC region, one in South Korea and another one in Thailand. So even though Alibaba Cloud business has slowed down due to recent regulatory crackdown, I believe this will not affect their long term. The cloud market still has big potential growth, projecting to grow 5 times to renminbi 1 trillion in 2025 This is because more non-internet industries are also picking up in adopting cloud services. Next on, let's look at Sea Ltd latest earnings now. For those who don't know, Sea Ltd is a Singapore tech giant who owns the e-commerce platform Shopee and game developer Garena. In their latest earnings, their revenue grew about 127% while total gross profit increased 188% year over year. Now I see that as a good sign because gross profit growing faster than revenue indicates gross margin expansion. Sea Ltd operates three core businesses: digital entertainment, e-commerce, as well as digital payments and financial services. Now first one, let's look at the digital entertainment business represented by Garena. Revenue was up 104% year over year and quarterly active user reached 654 million, an increase of 7% year over year. Quarterly paying user grew about 5.6% year on year. Now, on a year-on-year basis, the digital entertainment business did grow. However, looking at the charts, it's very clear their growth has slowed down tremendously. With the reopening of economy, people are spending less gaming time on the platform. This will affect their cash flow that is needed to fund their e-commerce and digital financing business. Next up, their e-commerce business segment, aka Shopee. Q4 revenue was up about 89% year on year. Gross order increased 90% year on year, and gross merchandise value or GMV increase of 52% year on year. Now for Shopee overall, adjusted EBITDA loss per order was 45 cents compared to 41 cents for the fourth quarter of 2020. The increase in loss per order is due to the new markets that are still in early stages of development, which are incurring higher losses compared to more mature markets like Southeast Asia and Taiwan. So overall, the e-commerce business segment is growing very fast. However, they are burning cash fast too. With every new market that they enter, they will need to burn cash. This is shown in their increasing loss per order. Now, however, Shopee remains at the top. Shopee was the top ranked app in the shopping category by downloads in the fourth quarter and for the full year of 2021. On Google Play Store, Shopee was also ranked first globally by total time spent in app and second by average monthly active users in the shopping category. Lastly, let's look at their digital financial services segment represented by Sea Money. Revenue was up 700% year on year. Quarterly active users across Sea Money products and services reached 45.8 million, up 89% year on year. Now, their Sea Money business continues to enjoy very strong growth. However, it only contributes less than 5% of the company's total revenue. It is still very small with huge opportunity, but there's fierce competition. Sea Money is currently still cash burning, but the management is confident to reach positive free cash flow by next year. Well, so that's something to monitor, right? So Sea Ltd has also released their 2022 guidance. For the full year 2022, they expect bookings for digital entertainment to be between 2.9 billion to 3.1 billion US dollar. Now, I see that as a bad sign. Their digital entertainment revenue for 2021 was $4.3 billion. So this expectation makes it around 30% decline for 2022. Plus, India has blocked Free Fire, Garena's mobile game, as part of a crackdown. Now, even though the impact is small, as India only made up about 2.6% of Sea Ltd mobile game net sales in 2021, it can significantly impact their future growth as India is a big market. As for their e-commerce guidance, they expect revenue to be about 8.9 billion to 9.1 billion US dollar in 2022. Meanwhile, for digital financial services, they expect revenue to be about 1.1 billion to 1.3 billion US dollar in 2022. That's a good growth guidance for both of those segments. So overall 2022 revenue guidance is at 13 billion, which is 30% growth from 2021. This is a significantly slower growth from previous year. Now, the way I see it, Sea Ltd must find a solution to grow their digital entertainment business, as it's the main cash flow contributor to fund the growth of their e-commerce and digital financial services segments. So now, with the latest results from both companies all laid out, the big question is it time to sell Alibaba and Sea Ltd? Some see the major share price crash as an opportunity, while some will say it is a red flag. We can see that both of the companies are facing short-term headwinds and challenges. It's reflecting in a slower growth for certain segments of the business. However, I'm confident that they are able to overcome it as well, build up other parts of their business to capture future growth. So, will you buy now because you have confidence that they are able to overcome their headwinds and capture future growth? Or will you sell because the uncertainty are just too high? Now do share with me as I enjoy hearing other perspectives. Please share your thoughts in the comments box below. Thanks for watching. Remember to click the link to join my free sharing session, subscribe to V channel, hit the notification bell and share this video with your friends and family. See you in my next video and I'm Lex. Goodbye.